Most rental properties look like good deals at first glance, but the truth is, one bad assumption about rent, repairs, or resale value can completely destroy your profits. In this video, I'm going to show you exactly how I analyze a property before buying it, including the free tool I use to estimate rent, the red flags that make me instantly walk away, and how I avoid getting ripped off by contractors. Welcome to Real Estate Simplified. I'm Bill Simmons. I've been investing in real estate since the 80s. Flips, rentals, multi-units, 30 plus years before I became a realtor. So I've learned a few things about the investor side. Today, I'm breaking down my personal process for analyzing rental deals. This is the same checklist I go through every time I look at a property. It helps me quickly figure out whether a deal is worth pursuing or if I should just move on before wasting time and money. Let's start with the number that drives the entire deal. The first thing I want to know is simple. What will this property rent for? But there's one mistake I see new investors make all the time. I'll explain that in a minute. Some investors think they know what rents are, but I want facts. For that, I use a free tool called Rentometer. You just enter the address, number of bedrooms, and it shows you rental prices for similar homes nearby. The free version lets you check a few properties a day, which is honestly works fine for most investors. Now, if the rent estimate comes back lower than I expected, I should stop right there and move on, because if the rent isn't strong enough, the rest of the numbers rarely work. Before digging deeper, I scan for instant deal breakers. One of the biggest for me is asbestos roofs. Those can be extremely expensive to remove and replace because of environmental regulations. Another issue is no off-street parking. In a lot of markets, that makes the property much harder to rent, especially for families. These things may not seem huge at first, but they can seriously affect both tenant demand and long-term value. If I see too many red flags early, I save myself and move on. Next, I look at the type of property. My personal rule is minimum 2 bedrooms, but ideally I like 3-bedroom homes because they appeal to a much wider range of tenants, and families especially prefer 3 bedrooms. That said, 2-bedroom houses can sometimes be great deals, so I never ignore them if the numbers make sense. Next, I figure out ARV, the after repair value, and the next step is where a lot of people accidentally overpay. This means estimating what the property will be worth after renovations. To do that, I look at recently sold homes nearby. When I'm comparing properties, I look at the number of bedrooms, number of bathrooms, square footage, lot size, garage or parking, condition, and updates. Any unique features. Another really important factor is how recently the home sold. I try to stay within 1 year max, but ideally much sooner. The closer the sale date, the more accurate your value estimate will be. Now we get into renovation costs, which can make or break the deal. One thing I always recommend is getting at least 3 contractor bids, and not just general contractors. Find specialties in each trade: electricians, plumbers, drywall installers, painters. Talk to them, get references, and check their previous work. A great place to find referrals is actually the contractor desk at hardware stores like Lowe's. The people working those desks often know which contractors buy materials regularly and do solid work. That can be a huge help when you're starting out. Another reason you want 3 contractors is scheduling. The next tip alone has saved me thousands. Sometimes one contractor might say, I can start in 2 weeks, but another might say, I can start tomorrow. Having option keeps your project moving faster. Remember, you're renovating for a rental, so you don't need top-of-the-line materials. It needs to be clean, safe, and functional. This isn't HGTV, so you're not removing walls. But you do need to repair or replace anything damaged, and you always paint. New flooring if needed, and it usually does. And you want it to look fresh and new. In real estate investing, time is money. I've also been fortunate because I'm pretty good working with my hands, and over time picked up a lot of knowledge doing basic plumbing and electrical work. That saved me a lot of time and money on renovations. Now, I'm not saying everyone should do everything themselves, but the more you understand how houses are built and repaired, the easier it is to spot problems. Avoid getting overcharged, make smarter renovation decisions. One place you can save serious money is demo. Contractors charge a lot for demo work, but it's usually not that complicated. So sometimes I'll do it myself with a friend or two, order some pizza, maybe grab a couple of cold snacks, and you'd be amazed how much work can get done in a weekend. Once I know the ARV, estimated rent, renovation costs plus 10%, then I run the numbers. Plan on a 3-month renovation schedule. I've actually got one done in a month, but I did a lot of the work myself, working stupid long hours, and I was a lot younger. If the deal makes sense financially, I move forward. If it doesn't, I walk away. Because the biggest mistake new investors make is forcing a deal that doesn't work. That's the exact process I use when analyzing rental properties. It's simple, but following these steps consistently can help you avoid very expensive mistakes. Now, if you found this helpful, hit the thumbs up and subscribe for more real estate insight and practical advice. And let me know in the comments what topics you'd like to see. Thanks for watching, and I'll see you in the next video.